Ladies and gentlemen, welcome to the Ross and Ayal discussing what to do with your SpaceX money show, huh?
Yeah.
The reason we wanted to do this is my partner, Ayal Shmilovich here, is the man who works with many of the people in the tech industry at our firm and runs our very popular podcast, Future Money, and also a tech investor himself. Yeah. But what we really wanted to talk about today is we've been through this cycle a few times with our tech employees, boom cycles like we're in right now. And it's just such a crucial thing to do proper financial planning when you're in a boom time, and especially when your company is going IPO. And because we work with a lot of people at SpaceX, and XAI, and some of the people that used to work at X, and some of the people who worked at Tesla, we're just getting inundated with calls. And it was like, well, let's just make a video. So like, if you work at any of these companies, it would like help you with like trying to understand what's happening. So let's go backwards for a second and say, so where were we? So 5 years ago, it was just all about Tesla, right?
Yeah, there was only Tesla, and everyone, it was the belle of the ball. Everyone loved it. There was and it was almost exactly 5 years ago.
It was exactly 5 years ago. And we were getting calls, up the yin-yang, from Tesla employees and Tesla shareholders that had made a fortune. And they were like, what should we do? What should we do? Now, there were two types of people.
I was going to say, some of them listened.
Right.
And a lot of them did not.
And some of them don't. Okay. So let's talk about the difference between the people who listen to us and the people who don't. Okay. Yeah. So the problem with the people who don't listen to us is they're so wedded on their investment thesis and the gains that they've made in the past that they can only see a future where that will continue and that any intelligent diversification or risk, taking risk off, is viewed as like you're almost like a heretic.
Yeah, and it's almost like shame if you made a bunch of money in Tesla and you sold your shares, it's almost like you're cheating. You're like cheating on your Tesla partner.
Yeah, I used to post like taking profits in Tesla, and people would be like, "Oh, you trader," and I was like, "Dude, I've made like 20x my money on this thing. Like I take money off the table. And that's why I'm rich." It's like, let's be real. If you don't take money off the table, you can ride the same stock all the way back down that took you all the way back up.
Yeah.
And so there's that risk. Now, the people who didn't listen to us 5 years ago, how much money have they made on their Tesla?
I mean, they're basically in the same place.
That's right. That's right. And I'm not saying that per se in a bad way, but over the last 5 years, the market's doubled. And so that was sort of the issue we had with some of our clients, is that we had so much Tesla 5 years ago at the peak. And then like when it declined the following year, 75%.
Yeah.
So that's the part we're trying to explain, is like, if you go from 2021, when everything was amazing, to 2022, literally a year later.
Yeah. It was night and day.
It was night and day. It's like the same thing happened with my fund. It was like, we started in 21 at the top and we had Tesla and all the stuff that was killing it.
Yeah.
And it was like, oh, we walked right into the correction.
And I think it's helpful to note that a lot of the companies that went public in 2021, like till this day, have not even gained most of their value back. A lot of them are gone. A lot of them are still down 50+%.
I mean, the 21 class of SPACs and IPOs was kind of
disastrous.
Really tough. And that was really a boom time. That's why I say we're not really in a bubble today. There's still lots of
there's too much fear for us to be in a bubble.
100%. And so I've done this because I'm much older than you and others maybe watching this, but I've done this several times.
Yeah.
And it's every decade you sort of get this bubble thing. Mm-hmm. In the decade before, it was real estate, if you really go back and
the financial crisis.
Right. Well, it led to the financial crisis. But remember, there was a bubble for 5 or 6 years in real estate where you were like an idiot if you didn't buy houses, right? And then before that, we had .com. And so when you've been through as many booms and busts as I've had in my career, I'm just like fundamentally conservative when I make a lot of money on something.
Yeah.
So like if I make 10x or 20x on an investment, I have to take profits.
Why wouldn't you?
Like
it just doesn't make any sense.
But I think it's a mindset. Yeah. And so the people who win in the end in these booms are the people who listen to financial advisors like us.
Yeah.
And so what was the difference between the people that came in 21, the Tesla people that listened to us and the ones that didn't listen to us? Not like performance-wise, but like what was the personality difference?
Yeah, I think the people who listened to us are the people who realized, who understood, like, look, either they made an amazing call on a technology that they found amazing and they saw the future kind of like we did. That was like the ideal scenario that they knew, and then they were like, okay, I made a lot of money and this was my premise and now we're good. Or they were the other side where they were like, look, I knew about Tesla and I kind of got lucky.
Right.
And I'm really pumped that I made all this money.
Right.
But now, like, I do not want to lose this money.
That's right. So we're talking about a very different personality, right? So one is part of investing is luck.
Yeah, for sure.
You know, there's the normal returns, and then sometimes you just get lucky and things go crazy.
Yeah.
You know, and so you recognize that it's time to take a little bit off the table because you got too lucky.
Yeah.
So those are people who are a little bit more humble.
Yes.
The second thing is those people still had conviction, but they didn't have obsession.
Hubris.
Yeah. Well, hubris too, but like, I mean, we talked to a lot of people that had $5 and $10 million in Tesla. And we were like, just take like 2 million out and put it aside. Like you have no money and you make $100,000 a year.
Correct.
And they would be like, no.
Yeah, absolutely. And I have clients who did both, like who were on both sides. And like, regardless of the returns, just the absolute stress that comes with the movement, the price fluctuation, because Tesla is not a stock for the faint of heart.
Well, I would argue all volatile stocks that
but it is a volatile one in particular. Tesla is.
It is. But I mean, I'm looking at some of the stocks today, like MicroStrategy and stuff people are trading.
Yeah.
And
Bitcoin's like, another one.
Seems like a little bit like
the Tesla people and the Bitcoin people
compared to some of the Bitcoin people, right? But I think so like there's gambling and there's risk taking and then there's like investing, right? And so like when you're investing and your premise pays out and you're right, you have to look at valuations and say, you know, does it make sense for me to hold a stock at 100 times sales?
Yeah.
You know, like I've made a lot of money here.
And
what could go wrong? You know, it happens to us a lot. Like we just had this with Kratos, right? Where it went from, we bought it at 25, okay? And then it went to 130 just recently. And I took about half that position off between 130 and about where it is now is in the 80s and 90s.
Yeah.
And I took about half that position off over 100. And I didn't change the premise at all.
No, absolutely not.
I like the position, but it's also a rebalancing, right? So then you're saying, should one stock be 10% of my portfolio that just went up 10x? Like that's probably high risk, right? So there's the rebalancing approach. And then there's just like the common sense approach of like, I've made 3 times my money.
Yeah.
Taking money off the table just makes sense.
Yeah. And the valuation,
it's not an ego thing.
No,
you know?
For sure. And the valuation matters too, right? Because if you're trading, like if you have a stock, like for example, let's just say Google, we'll use that as an example, which has done very well, but you still have a stock that's 25 times earnings.
I know.
Like you should still diversify if 100% of your portfolio is in Google, obviously. But the risk to the future of the business and the risk to your money is significantly lower than a stock that's 400 times earnings that can get cut in half in a week.
But you're talking about something that I think the average person who has an investment portfolio isn't per se naturally good at, which is what is the correct valuation for the stock.
Yeah.
And that's why seeing a financial advisor is so important, because especially if you're highly concentrated in your own company stock, like you've been working at Snowflake forever and you have all this Snowflake stock, you know, like I just had this with a client who has a lot of stock in a concentrated position in a company, tech company they worked at. And this was 15 years ago, they stopped working. Yeah. And this tech company, he accumulated a fairly large amount of shares in it and just, it didn't do anything for the last 5 years. The 5 years before, it earned 0% rate of return. And then it was like, boom, it's an AI play.
Yeah.
So within the last 6 months, that position has gone up like 80%.
Yeah.
Now, in this person's case, they're just like super heavyweight this position. So the last 6 months, they're like, "Oh my God, this is like the cash in of all cash-ins."
Yeah.
They've made millions and millions of dollars. And the first thing I said is like, you know what? I don't know if this company is that good, And he's like, I don't think it's that good either. And I used to work there for a long time, but AI plays are AI plays. I said, let's start selling a little bit every week until we get this allocation to make a little bit more sense. And that's just what we've been doing. Then they report earnings, they blow out earning. It jumps another, 30 points, and we're selling a little bit every week.
And that's good.
And he said, what's the strategy? And I said, the strategy is if I just sell a little bit every week, because I don't know what the stock's going to do. And I don't know when the rally
and
is.
I tell people that all the time. And this happened with Tesla too. I go, okay, if you sell a quarter of your position and the stock doubles from there, are you going to be that mad?
Right.
That the stock doubled? You still have 75% of your money in that.
See, now we go into a psychological issue.
Which is, as you know, is
your
my
specialty.
Forte.
and at GK, we're very into behavioral finance. Yeah. Because we look at our jobs as actually managing people, not managing money in a lot of ways. Because managing people is actually harder than managing money in a lot of ways. And so, like, when you think about the behavioral psychology of clients who sell a part of their position and then it rallies and they're upset because they sold.
Look how much more money I could have had.
That's right.
Yeah.
And a lot of people think that way, actually. And it's just almost like a natural, like you kick yourself in the foot for being right kind of thing. It's like, well, I was right, so I took some profits and then it rallied some more. Oh, I'm an idiot.
I mean, I did that with NVIDIA.
You're not.
I did that with NVIDIA.
You're not an idiot.
I sold some NVIDIA at 120 and then I sold some at 150 and I sold some
I think hindsightism is a very powerful thing.
For sure.
Like, it's so easy to look at something backwards and be like, that was a great decision. That was a bad decision. But when you're actually making those decisions, you have no idea what the future's going to be.
No, absolutely not. Like, tomorrow something changes or the market changes or the world changes. And guess what? Like, everything you thought, we had this discussion a couple weeks ago. Everything you think about earnings and about the numbers and about the company that you love and you're so wholly convicted in it. And then something crazy in the world happens that nobody saw coming.
I mean, it could just be an airstrike in Iran.
Yeah. And then all the valuations that you did in your head mean nothing.
Yeah. So now let's talk in specific of what's happened since Tesla. So we started with, our first real boom with the Tesla clients and really dividing our clients into two categories. People who, sort of got that they were lucky a little bit. Yeah. And even though they had a great investment premise, wanted to make sure that their generational wealth wouldn't disappear. Yep. And then you have the second group of people who were just so sure that this was only the beginning. They wouldn't listen to us at all. And in a lot of cases haven't made money in 5 years. Yeah. And at one point lost 75% of their money in 22, and then it stayed down. And it was only because of the miracle of Elon backing Trump that the stock got back up to 400. Yeah. Okay? Yeah. But just the same, it's still an uncertain time for Tesla. Now let's move over to XAI, and SpaceX, because I'm sure a lot of people, that's all they care about because that's what they're in. So this video is really specific to people who've worked in an Elon company right now.
Yeah, absolutely. And we work with a lot of people who have either been at one or several of these companies.
A lot of times they've been at several of them. Yeah. And then you're going to turn over if you're at an Elon company. Yes. Nobody there is really long-term except for Franz, I think.
Yeah, I mean, he burns people out.
And it won't surprise me if Franz leaves too, because he doesn't care about cars anymore. He just canceled the Model S.
Yeah, and that's I think, the Elon, vision, if you want to call it that. We could talk about whether it's a vision or not.
We could do a whole show.
Yeah, that's a different thing. But he buys X, buys Twitter. Now he wants to call it X, and he wants this to be like a super app. I think half the people left Twitter since he bought.
I mean,
I'm not counting the bots that actually were already on there.
I mean, being a long-term Twitter guy, I can safely tell you it's changed dramatically.
I mean, I used to use it every single day, multiple times a day, and I use it 0 now.
Yeah, it's dead. Yeah. So it became a data feed for XAI, and so XAI purchased Twitter. And at the time, because we were investors into the Twitter deal at the time in 22, because we were still, at that time, still on the Elon bus. But so we invested in that and then proceeded to lose, 75% of the value of Twitter. So when it merged with XAI, we were really excited. Yes. XAI is a way better investment than Twitter. So it was like a big win for us. Yep. And then XAI is in rapid scale mode to compete against the biggest companies in the world.
Yeah, for sure.
And so when you look at the numbers, like Google is throwing out
$185 billion in CapEx.
Which is really just like 100% of their cash flow for the next year.
It's crazy.
Because they're so big. That's actually their cash flow.
Yeah.
But like, it's kind of like what we did at GK last year, where we just spent like all of our cash flow to like grow the business and build the infrastructure.
Yeah.
And it's like paying off already. And so it's like, I love this from Google.
Yeah.
But if you're XAI, you're in this like huge battle.
You got nothing. You got
win.
Yeah. And you're competing against OpenAI. You're competing against Google, Microsoft.
Which is Microsoft.
Right. Microsoft. And then you're competing against Amazon. Right.
And then you've got Meta.
Yeah. And Meta. Right. Exactly.
And so like, and if they're all spending over $100 billion, how do you compete?
How do you, yeah, exactly.
And so then they merge with SpaceX, which just happened this week.
Yes.
And so this was very surprising to me, being an XAI shareholder through my X, through my Twitter. And I was also thrilled because XAI was in a cash position with lots of dilution coming.
Yeah.
And SpaceX is not in a similar financial situation, and a much better financial situation and a much higher valuation.
Yeah.
And they were able to merge these companies because of the huge demand XAI has for capital. And with the ultimate...
and the fact that Elon could vote his own...
I've never seen a merger like this.
Can vote his own company.
I literally got a letter. It wasn't even a proposal. They usually get like a proposed merger.
Yeah.
It's like, here's the proposed merger. Netflix wants to buy Warner Brothers. Here's the deal. It's like a book this thick I got to read, And in this case, it was like a one-page email doc.
It's like, guess what's happening?
Yeah, guess what's happening. You don't have any say. Don't worry, though. It's good for you because I say so.
I always I pictured it exactly like this. I pictured it like, like almost like in cartoons when you're just like, somebody asked in this office, like, how did this even happen? I go, well, it's got to be really hard for Elon to convince himself to merge two of his companies.
Should I merge it?
Yeah, I think so.
Yeah, totally.
All right, that sounds like a good deal. Shake on it?
Yeah.
We're good.
Anybody have any disagreement? No, I don't. I mean, I wish my household worked that way. It was like, honey, we should be doing this. Sure.
And then everybody at SpaceX gets a 25% bump in their valuation.
See, this is the part that's tricky here. Because the way the document is worded, it said the investment banks came up with a valuation between 0 and 250 billion. We chose 250 billion. And with SpaceX, we got this number to this number, and we chose $1 trillion. And so together it's 1.25 trillion.
Yep.
So here's where it gets tricky. Because if you're a SpaceX employee, and there are thousands of them here in Southern California, now you're like, wait, we were going to go public at $1.5 trillion, and I thought the company was worth 800 million at the last round.
800 billion,
if we went public, I would double my money, and boy, that would be great. And then after 6 months lockup, I could sell if I wanted to and buy that house.
Yeah.
The problem now is you've got this dilutive effect of the 250 billion. And what they did was they pumped up the value of SpaceX from 800 billion to $1 trillion.
Yeah.
So if we're both equally as overvalued, it's not so bad. But the problem is if we were going to go public at 1.5 trillion and now the internal value is 1.25 trillion, that's a lot less attractive to the people who work there now, right? And there's a risk involved with going public, like Gemini space station that crashed to Earth, like hardcore. And so
you can't just call it a learning exercise anymore.
Right. So you go public at 1.5 trillion with SpaceX stock, but you've got this 1.25 trillion valuation with 500 billion that just got pumped up out of nowhere.
Yeah.
And maybe the stock doesn't go up.
Well,
that's where it gets tricky if you're a SpaceX.
That's the conversation I've been having with a lot of the SpaceX people, and some of whom have been there for a very long time. And, going back to the behavioral finance thing, if you've worked at SpaceX for a long time, you've seen your company go up 25% like clockwork, basically, for the last 2 decades, essentially. Right. So
and a lot of that value creation was real.
Yeah. The company is an amazing company. What they do is amazing. But, psychologically, you're like, I got a 25% bump every year in my valuation. Well, I get a stock refresh. I get a this.
Or even the last year, double.
Right.
Yeah.
So you're like, this is amazing. The psychology, and even if it goes, right, they did a $800 billion buyback, as you said. Now they have a 1.1 trillion, 1.25 trillion, whatever you want to call it now. And they're supposed to go up to 1.5 trillion for this IPO. Now you're going to start to see what we know. Again, we don't have any other knowledge other than we talk to our clients. Like, a lot of our clients have never taken profits from this company.
That's right.
And so there is a lot of pent-up demand to liquidate.
Right.
To get some kind of liquidity at least.
Think about the guys in the last round could have sold.
Yeah.
And they're like,
why would I
that
sell?
when
But a lot, actually, for the first time, we got a lot of inquiries that were actually interested in this. And many of the conversations, so I said, when the stock goes public, you're going to start to see some heavy price movement. And so that's going to have a very different psychological effect than just seeing your $5 million stay steady
it's
every day.
GK private stock in our company. It's the same thing. When you're a privately held company, there's no volatility.
Yeah.
It's
if you've consistently gone up every year, you're like, I'm good.
Every year, you're like, I'm great. And that's why going public is such a big deal.
Yes.
Because that's when all truth is sort of revealed, right? And that's, I think, kind of why we're doing the video, because if you work at SpaceX, you got to say to yourself, what is the valuation of this company really worth? And so let's work backwards around that, because we know that the number that SpaceX is that they're doing $15 billion in revenue.
Right.
Now, we've seen some weird profit numbers, which I don't believe.
Right. I agree. They say like $8 billion EBITDA.
But I think that doesn't count the cost of spaceships or something like that. So let's just use revenue, because we know that number probably is true.
Yeah, in growth companies, revenue is, generally...
the space business is 100% government.
Yeah.
So it's like you can figure out how much government business you're going to do.
Yeah.
And then you've got Starlink. And Starlink is a great business. It's a wonderful service, but it's also very capital intensive.
For sure.
So as a growth business, I don't know what the costs are to maintain Starlink and to continue to, and we know the revenue's pretty good, but I'm not sure like what the actual profit numbers are. Right. So when you say, okay, here's SpaceX and Starlink, here's this business, let's just not assume a huge profit margin because it's space and it's satellites. But, you got a $15 billion business, maybe a 10% margin, So, you say, I don't know, maybe you give it the best case 10 times revenue, right? Like that's a great multiple.
Let's give it 20 because it's an Elon company.
Right. So now you're at $300 billion, which ironically was where it was at like a year and a half ago, So it was probably priced right before this whole run-up thing happened, where they went to 400, then they went to 800, now they're at $1 trillion.
Yeah.
But not much has changed in the company other than they just marked it up.
Yeah.
And so the way I see it, when they merged XAI, they created a whole different dynamic, because this is a cash drain. And so whatever EBITDA they were making, let's call it $3 billion in EBITDA and $1.5 billion profit, whatever EBITDA they were making,
that's gone.
It's gone.
Yeah.
It's gone. And so now you got, I got these assets. I got the data centers now, let's say 20 billion a data center. So there's value there, but they marked this thing up to 250 billion.
Right. So not that much.
What in God's name?
In a data center that basically will depreciate over time.
But if I take $25 billion and I build 2 data centers with it, how does that become worth 10 times more?
Yeah, no, it doesn't. But as we know, when you invest in an Elon company, you are investing in a dream.
Right.
And that's what he is good.
Until you go public, right?
Yeah. But I mean, obviously if you go public, it becomes much more transparent. But even with Tesla, which has obviously been public for a very long time, we know that almost all the time you're getting ridiculous multiples. Yeah. When we were talking about starting to sell Tesla in 2021, they were trading at 400 times earnings and 50 times.
It was 100 times earnings.
I thought it was at the peak. It was
no.
Oh no, it started to go down. Sorry, the earnings started to go down
because earnings were going up.
Yes,
and what was happening in 22, the expectations it was like $2, and they were trading at. It was like, and then it was going to $4.
Yes,
and it was like 100 times forward earnings was like the typical multiple for Tesla.
Yeah,
and then in the last 2 years, it's changed to 400 times earnings.
Because earnings kept going down. But the price didn't move much.
But if you actually look at earnings of Tesla over the last 6 or 7 years, it was going up rapidly, and now it's gone down rapidly.
Yeah.
And so the stock started to do that and then just reversed when Trump got elected.
Yeah.
And so there's this weird divergence away from fundamentals with Tesla. Now, still, any way you look at it, Elon's worked very hard to keep investors focused on a potential future that
may or may not
could be massively abundant. And so therefore investors have given a premium that we've never seen in Tesla.
Yeah.
On the other side of the coin, I'm a SpaceX employee. I don't know what SpaceX is worth. Let's say the most it's really worth is 300 billion. I don't know what XAI is worth, but they just did around at 100 billion. now it's 250 billion. And part of that was Twitter. So it was 60 billion plus the 40 billion from Twitter. So actually XAI was 60 billion like the other day.
Yeah. Yeah. The numbers are sketchy and they're scary. And so
what do you do?
Yeah.
SpaceX goes public.
Yeah, most of you are locked in, right?
You're locked in for 6 months.
In for 6 months. You can't really do anything. The people who are going to make the most money are going to be the investment bankers.
It's a Morgan Stanley gold mine, right? Because they take a company public with $1 trillion, and if they make 1 or 2% off that, that's massive.
That's a lot of money for them, and they'll make a lot of that.
Fee,
And just to remind people, when a company goes public, they really just release a very small sliver of the shares to the public.
It'll probably be 5% of the shares.
5 to 10 usually, right? And they generate interest, speculation. They do
they know that people are going to dump their shares in 6 months.
I think they do know that, and so it remains to be seen that after that lockup, when all the shares become available to everybody, and even the people before, institutional buyers before, who do have the ability to sell.
Well, I think it'll be interesting once they go to institutional buyers with this XAI SpaceX deal and say, okay, we want to go public at a $1.5 billion valuation, so you've got to buy in $1 trillion.
Yeah,
I know. It's like, $1 trillion is now the new norm, And I remember it used to be like so stoked if you were a unicorn. They're
like, oh, you're a $1 billion company.
Now you're like, oh, you're so small.
Yeah.
Like, why is you're not even successful at $1 billion? It's like, we can build our company to $1 billion. I'd be thrilled.
Yeah.
And now I feel like a small fry, right? You're like, maybe I should just like mark up the value of GK.
Let's do
it. 100 times earnings, 100 times revenue, right?
100 times revenue. I like it.
Then we'd be worth like billions. So
I'll take it.
Maybe that'll happen. Maybe I should make up some more stuff. I don't know.
Let's not do that.
Okay. We're not going to do that. Sorry. So backwards, SpaceX employee, what do you do? What do you do?
Yeah. I mean, honestly,
for 6 months, you got to sell it.
I don't know if you sell everything, but you definitely should be thinking about taking some off the table.
25, 50% off the table.
Like, I mean, a lot of these people have made 10, 20 times their money, 50 times their money because of people who are really early. Like, I have clients who literally have shares at like $1.
But we're getting interest from clients who want to buy SpaceX. So that's what I think supports the price on the short term is like people want this in their portfolio. Yeah. Now, I'm in the camp that I think Tesla and SpaceX are going to merge. So
now we got Tesla, XAI, X, SpaceX.
Starlink.
So we're going to have, what was the thing I said? We're going to have autonomous driverless robots making data centers in space. With rockets.
It's really the ultimate risk company, right?
Like the Jetsons.
It is. It's like, but like,
if
you're an investor and you're like, I got to own $1 trillion companies. I got to own Lilly. I got to own Walmart. I got to own Tesla, which is now X, let's say. And then I got to own Google. So that's how Elon becomes on the level of Google.
And now he's trying to get into the S&P 500 and the NASDAQ accelerated.
Public.
They're like, oh, you just put us in. We know you have these rules where you have to be out for a year and be profitable.
But what are rules anymore in America? Why even have rules or a constitution for that matter? We can talk about that. But I think it's a really challenging time if you're one of these employees because maybe you were putting money in and you were getting paid, and let's say you've amassed, I don't know, a couple $100,000 to $1 million of stock, and now it's worth like $3 or $4 million. But you don't really have access to realize those profits until the 6-month lockup come out. And so it's a very important thing to develop a financial strategy before any of this even happens.
For sure.
And like, that's kind of why we're making this video is really, it's, you got to take action and get prepared for this because you might not have a big window to sell before the stock really gets hit because everybody knows when the 6 months is up.
We're preparing.
And there's short sellers too, remember.
Yeah, for sure. And I'm preparing my clients already because they might not be able to sell. Let's say SpaceX does go public in June, July, like they want to. We're talking this time next year, basically, when they have liquidity, right? I'm preparing them from now. Be ready. Like, let's talk about our strategy. What actually is? How much are we selling? There's hedging strategies that we can put in place.
There's also hedging strategies.
Right? There's like, do you want to just sell it outright and get out? Like, there's not one.
And then there's tax strategies.
There's tax strategies. There's tax-aware funds that you can use. So, like, there are a lot of different ways that you can diversify out of it. And again, selling some of your stock does not mean you're a traitor to SpaceX, does not mean you don't believe in the mission, does not mean that You don't love where the vision is.
Remember what stock Elon sold so he could buy Twitter?
Yeah.
It was Tesla.
Yep.
So,
there's no qualms about people who own a company selling their stock. Elon did a bunch of it, and Michael Dell did a bunch of it.
Well, I'm going to be honest. I'm a little bit attached to some of my Tesla stock that I haven't sold because I just want to keep it.
But you sold some of it.
I sold most of my Tesla.
So, and I sold.
But
some
I'm just saying, people get attached, emotionally to. I used to say a piece of paper when we had stock certificates. We don't even have the piece of paper anymore. Yeah. So you're attached to a digital number on a screen with a couple letters in front of it. Why?
Yeah.
It's like. So
I love the question.
So I do think that there is a psychological element of am I not being loyal because I'm doing what's best for me and my family? And it's not it doesn't hurt Tesla that you sold stock.
No.
It doesn't hurt anybody.
I agree. And I like to do this exercise with clients who have highly concentrated stock positions, be it in SpaceX or Google or whatever company it is. And I ask them the same question as I go, okay, you got $5 million in this stock now. If I could trade you $5 million in cash for this stock now, and you have $5 million just in your bank account, how much of that $5 million would you use to buy SpaceX at this point?
I love that example. Yeah. I do this all the time.
Yeah.
I say it to myself all the time. Because I'll look at my portfolio and I'll be like, if I sell everything, would I buy back the same positions in the same amounts?
Sure.
And in my case, the answer would be no because of taxes, because I have
the tax purposes, and that's another consideration for sure.
They're good companies, so I don't want to just lose 30% by selling, right?
Yeah. 37 if you're in California, max.
Okay. I was being generous to myself.
It's crazy.
So 40%, let's say, but that's a big hit.
Yeah.
So I've owned Microsoft forever.
Yes.
I've owned Disney forever. So am I going to sell more? And I'm not happy with Disney right now, but a 40% hit from where I am today, it's like selling at $60. And I'm like, dude, I would be a buyer of Disney if it was $60.
Yeah.
So why would I do that? And so I think because of tax considerations, we will hold stocks. But if you're going to end up seeing that position fall by 20, 30, 40%, then you absolutely should take profits. So we can't predict the future, as I said, but we know that SpaceX will be highly overvalued when it goes public. And so there's a pretty big risk of decline relative to gain.
Absolutely.
And so that's, I think, the calculus that we want to do with clients in highly concentrated taxable positions is weighing what's really best for you. What's the risk that this could reverse? And then what is this tax cost? And then how do we mitigate risk and tax loss? Yeah. And it turns out this is a highly complex
there's so many factors.
That's right.
So much stuff,
and that's
so much
why
work
we're here to help.
Yeah.
So
people think we just do
if you just reach out to us at Gerber Kawasaki, you can send us an email. Go to GerberKawasaki.com.
Yeah.
You can send us an email. You can go on,
search us on
message
Google,
us or whatever.
Gemini, Grok.
Yeah. You can ask AI if we're good. No, but reach out. I think
I agree.
It can't hurt you to have a free initial consultation with one of our advisors or myself or with Ayal and
we have our tax team here too, which is actually really instrumental because I've had several meetings with my clients in the last few weeks at SpaceX with our tax team to discuss all this stuff. Taxes are highly complex. Some people have RSUs, some people have incentive stock options. The taxation is very different. There's so many things that go into this. It's not just whether is this a good company or a bad company? Is this a good investment, a bad investment? There's a lot of things. And so even if you just talk to us just to kind of get your head around what your options are.
And strategy options. Yeah,
for sure.
And this is really like a strategy you're developing. And then, on the final note, after seeing this so many times over my career, it's like you have this opportunity only so many times, maybe once in your life.
Yeah.
And, if you don't manage it right, you live with regret forever.
For sure.
And I saw this as a young person during .com because so much wealth was created in 5 years. It was insane. And for me too. But then to see so much of it get wiped out and then not people holding on and waiting for it to recover, people losing.
I've had these conversations
it's
too.
Like, wow.
You're not going to regret having $8 million versus $10 million in your life, but you will regret having had a paper net worth of $8 million and seeing it go to 2.
Oh, totally.
That will and one of my,
it's not something that goes away.
No,
you like forget.
No, that sits on you forever. Right. And I talk to clients still from the .com era who still are scarred by that thing. So it's not great to be that person. And one of my favorite
ask
sayings,
Jim Cramer. Jim Cramer was a billionaire for a day.
Yeah.
Yeah.
But one of my favorite sayings.
And where's the street.com today?
I mean, there's the inverse Jim Cramer ETF now.
But like he was a billionaire in a stock that's gone.
Yeah. And it's like, but one of my favorite sayings is, you get rich through concentration and you stay rich through diversification.
100%.
And so let's leave everybody with that.
I think that's a great way to leave. Thanks, Ayal. And once again, just reach out. We're here to help. There's nothing wrong with asking for help. And more importantly, you're in this wonderful, wonderful opportunity that comes around maybe once a lifetime. So, we're really happy for people who've worked at SpaceX and accomplished so much, but it's also really important to do what's right for your financial plan. So reach out to us at Gerber Kawasaki. Yep. We're experts at helping people in the technology industry, and it's something we've been doing for me 3 decades and for Ayal 2 decades. And, I certainly feel that this period of time is unique and wonderful and not one you don't want to miss.
Yeah.
Locking in your profits if you're a SpaceX.
For sure. Well, thanks, Ross, the man, the myth, the legend, Ross Gerber. Appreciate you joining.
Yeah. Joining our
own podcast.
Our own podcast.
I appreciate you joining me.
I appreciate you joining me. All right. Thank you.